All right, welcome back to Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Thank you very much for tuning us in. Love seeing you here. Lots going on today all over the markets. Let's see about what our markets are saying to us. Let's bring up a corn board and see. We've been in the green all day, and we've added to it a little bit here. July corn, 7 cents higher to 457 3/4. That's what? 3 ticks off the high of the day. Well off the lows. We've had about a 9-cent range, not quite. But that's pretty good for corn as of late, isn't it? Dees, the new crop, is up 6 1/4 cents to 479. That's 1 tick off the high of the day. And we've had an 8-cent range, so that's pretty good going there too. All right, that's corn. We like it. That's something a little bit different, right? Here's where the strength is, though. July beans up 19.5 cents to 11.89 3/4. They're still 2 1/4 cents off the high of the day there, and we've had a 22-cent range. Novi beans, that's the new crop's up 15 1/4 cents to 11.80 1/4. That's 1 3/4 cents off the high. And I'm going to say we've had about an 18-cent range back there. Maybe not quite 18 cents, but still, it's pretty wide. That's soybeans for you. We're up between 15 and 19 cents across the board. Let's move over to see what the wheat's got in store for us. This is Chicago wheat. It's up a penny in July. $6 1/4 cents last. It's just on the right side of $6. We're only, I don't know, about a penny and a half off the lows of the day and 15 cents off the highs. How about that? We're settling back in here seriously. The Dees wheat in Chicago, that's up a penny and 3/4 at 647.5 to give you an idea about what the deferreds look like, and that's a penny and 3/4 off the low of the day there and 12 cents from the high. Hard red wheat in Kansas City, let's go there after Chicago. We got a 7-cent gain in the July. 632 is last, 6 3/4 cents off the high, 7.5 cents off the low. All right, so I would say that's pretty much in the middle of the range. Dees is up 6.5 cents to 666 even, and that's about 5 3/4 cents off the high. Moving over to the spring wheat in Minneapolis from Kansas City, let's go to Minneapolis. We're up 4 cents there to 706 1/4. It's still well off the highs. By about 3 3/4 cents. And then we've got a Dees board that's up 3 cents to 722 1/4. And that too is about 3 3/4 cents off the high of the day. All right, that's spring wheat. We finally go to cotton. This is where we struggle. 38 points lower in quiet trade. 76.13 is last there, and Dees is down 55 points to 74.62. Let's bring on our guest analyst. It's Ted Seifried, Zaner Ag Hedge. Ted, thanks for coming on. All right. I know I'll let you tell us, but there has been some news about maybe some flooding, and we're all a little concerned about some of that down south. But it's good to see the green on the screen. I'll take it. But is it legit?
Yeah, that's a great question, Scott. I mean, certainly we are in the time of year where we have risk for the crop. In this case, it's risk for planting. So too much rain is a bad thing. There's been a lot of talk about how quickly the levels are rising in the Mississippi River. Some people bringing back, thoughts of, the big floods that we had and then 2019. And so, yeah, there's concern, and that's being reflected in the markets here today, Scott. I'm also going to say that the Fed announcement, or not really a decision, because unchanged is unchanged and expected, but the easing of quantitative tapering or quantitative tightening, that has been beneficial for markets as a whole. So you got both of those things kind of working together here today, giving us some strength, looking pretty good. For July corn, the number you want to watch really closely is 460, right? That was the high that we had the day where we had the prospective plantings report, where acreage came in well below expectations. That was our spike high. It's been our high for the last couple months, Scott, and we're kind of flirting with that here. It also happens to be our 50-day moving average. So for two reasons, that 460 number is a big deal for that July corn. And if we're able to close above it and solidly above it, we talk about short covering and the funds having a massive short position. Well, that would really get some attention and could really start to spark that a bit more than what we've seen so far. So big day for corn here. Soybeans, yeah, kind of, right? I mean, remember we had that bigger down day on Tuesday, a bit of a corrective day yesterday. Now we're up and over Tuesday's high. So it is looking better on a chart, but it does have layers of resistance, in particular the $12 psychological area. And when you talk about planting delays, Scott, if this is an upfront thing, if this is like, next 2 weeks or so, that's a much, much bigger corn problem than it is soybeans. Soybeans are already well ahead of our 5-year average pace, and we plant soybeans later than corn. In fact, we could see some corn acres shift to soybeans. So this is a very double-edged sword for soybeans. Watch how they trade today. It could be really flighty. It has been, basically since this, weather rally, delayed planting rally, or attempted rally started. So yeah, soybeans could be telling today. Either way, there's a lot going on. Certainly big rains happening across all of Iowa right now. We're watching that. Hopefully everybody's okay. There's a lot of red on that screen. But we'll see. The interesting thing, and last thing, Scott, go back a couple weeks ago, we were talking about how wet it was on the eastern half of the Corn Belt, how dry it was on the western half of the Corn Belt. Well, we're getting a whole lot of rain on the western half of the Corn Belt, and the eastern Corn Belt is remaining relatively dry. So we might look back 3 weeks from now and say, hey, that's just what the doctor ordered.
That's what I'm thinking.
It really depends on what happens to the weather going forward.
I know, from our farm, farmers are never going to curse rain. I know it's going to make them a little uncomfortable getting in the field, but it's generally, well, not generally, almost always a good thing. All right, stay right there. We got to jump, but we're going to go away. We're going to pay some bills. We're going to come back and talk more with Ted Seifried, Zaner Ag Hedge, Chicago, right after this. All right, welcome back to Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Let's take a look at some of these livestock prices, right? Let's take a look at live cattle. Live cattle are off and running. Well, this is good, but we've also been a lot higher, so I don't know how you want to take this, but look at June. That's up $2.85, now $2.90. 176.75 is last. We're $1.25 off the high of the day and only 30 cents from the low. All right, how about that? I'm going to go out to the D. That's up $2.42 to 181.92. All right, from the live cattle, we go to the feeders. What do they have in store for us? Well, we got good gains, but again, good news is good gains. Bad news is we were a lot higher. August, the feeder cattle up $3.52, 255.30 now is last, right? Look at that. But folks, that's a full almost $2. Oh, it's more than $2 off the high of the day. So there you go. October's up $3.42, 256.07 there. And finally, lean hogs. Let's go there real quick. They're off steady to a little easier. 70 cents lower in the June. 99.72 is last there. Let's bring in Ted Seifried, Zaner Ag Hedge. Ted, I got about 45 seconds for you. Good news is cattle are higher. Bad news is we were a lot higher.
Yeah, you said it, Scott. Absolutely. We got good news after the market closed yesterday. They tested a whole bunch of beef samples and no bird flu. So, Scott, you can be assured that you probably don't have bird flu. Yeehaw.
Yeah.
So, look, and that's a sigh of relief for the market. I mean, it's a big reason why we've been down as hard as we were the previous 2 days. So we're taking a lot of those losses back. But then, after we get higher and as we get into the session, I don't get the feeling this is over yet, Scott. And I think the market's feeling the same way. So we have simmered down. Now, on top of all that, you do have a little bit more optimism that the next time the Fed meets that we're going to maybe get rate cuts, at least after the language that we heard from Jerome Powell yesterday. At least my feeling. So, you've got a little bit of a renewed hope for consumer confidence and beef demand. So those two things working together have us higher. But the question is, can we stay higher? The chart doesn't look great still, even after today, but especially after we pull back off our highs. It would look a lot better if we were able to get back to those highs by the end of the day. And it's a long day yet, so we'll see what happens.
Great stuff as usual. Really thanks for coming on. Ted Seifried, Zaner Ag Hedge, coming to us from Chicago. Bring it back here to Nashville and hand it back over to you, Tammy.
All right. Thanks, Scott.